check, quick sound check. Can everybody hear me loud and clear? Let's get a confirmation in the chat if you can hear me. Welcome, everyone. Sounds good. Awesome. Thank you, Coach Hoop. Good check. Welcome, everyone, to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but our goal as traders is to identify opportunity and see how we could have taken advantage of those opportunities while managing our risk. Normally, I'm here with Coach Paul. Coach Paul may be joining us in just a few, but if he does join, we will pull him in. Hondo, first time. Let me know in the chat if you're a first time viewer. If this is your first time at the Buzzer segment, thank you for joining. If this is our first time meeting, I am Coach Jay. Been a Topstep Performance Coach for a little over a year now. Been trading the markets for about 11 years. Started off trading stocks and options and moved over to futures about 5 years ago. Was just on Topstep TV with Coach Dakota and got to trade some of what was a great trading day today. So hopefully you all got to experience that as well. I got a first time from Wit, first time from Hondo. Thank you all for joining for your first time. The way we start this segment is by talking about the major movers on the day. We'll go to top percentage movers. Give me 1 second. Let me get this chart all correct. And we know we did have news out today as well that the market was waiting for, so we will get into that as well. To the downside, we had micro Bitcoin futures down 0.68%, soybean oil down 0.91%, and micro Ethereum futures down 1.71% for our biggest percentage mover to the downside. To the upside, we had nat gas up 1.84%, the NASDAQ up 2.04%, and crude oil up 2.25% for our biggest percentage mover to the upside. The NASDAQ is crazy because if you were watching today, the NASDAQ at one point was down about 1.5% on the day. We do know that we had news come out this morning. We had CPI, the inflation number come out this morning. We also had a 10-year note auction, which gave us some volatility. And that CPI number came in as expected, right? So forecast 2.5% year over year. And what we got was 2.5%. Monthly forecast in line as well. So not much of a change for what was expected. We do know that some of the biggest news that the market is waiting for is that FOMC rate decision tomorrow. Sorry, not tomorrow. That is not tomorrow. That is next week. FOMC rate decision next week. So far, what is forecast? And I'm going to change my screen real quick. Sorry for the flashbang. We're going to go to a white background. But we are seeing an 85% probability of a 25 basis point cut and a 15% probability of a 50 basis point cut. So pretty sure, as far as this goes, that the Fed is going to cut rates next week. What that number is still to be determined. And we will hear what that number is on the FOMC meeting next week. But right now, traders are looking at an 85% probability of a 25 basis point cut. Shout out to Coach Hoop in the chat for answering some of the questions. Let me know in the chat how your day went today. Were you up on the day, down on the day? Today was a day, we can kind of call it a tale of two trends, where we had a pretty big down move early in the equities off of that CPI print. We were down, like I said, in the NASDAQ almost 2%, but we ended up 2%. If anyone was trading all the way up, David, yeah, the tale of two trends, right? If you were short this market early, we saw rips on fast markets with Dakota this morning, shorting the market, making a ton of money, and then Dakota jumping in on the long side and then taking the long, right? We don't need to be right about where the market is going to go. We just need to trade right, and that's what we saw those guys do. And then hopefully you caught, what was Power Hour, where we still had some of that move left to trade. Let's zoom out to a higher time frame. I'm going to look at a 30-minute chart, and we were going to look at the moving averages. These moving averages I learned from trading with Coach Paul. We have a 20, a 50, and a 200 moving average. This is a 30-minute chart, so the way we're going to see these, the 20 moving average is yellow, the 50 is purple, and the 200 is white. And if you guys were on with us yesterday, we talked about this pattern, right? We get to see the market like this. We talked about that this kind of squeeze here. And it looks like the moving averages are starting, the shorter term moving averages starting to cross above that longer term. And when we, it was violent because this is the NASDAQ and it's always going to be violent. But once we started to get some closes above that, with the 20 and the 50 above, that's when our trend started. I think that we might be, the trend might be changing, right? Look at how long we've been under that 200 moving average, and then we pop back up here. So really interesting for sure in these markets. Let's see. One other thing I wanted to pull up is the anchored VWAP for the month. We have been talking about this. Again, these higher time frame VWAPs have been some of my favorite to look at. I'm going to put two different ones on here. So the green one up here is going to be the monthly VWAP. We can see how for the month, and of course the month starts September 1st, so we're going to chop around there. But once we started, trading a couple days this month, that anchored VWAP started to act as a resistance, right? Every time we visited it or came close to it, we sold off, going into this week as well. And then I'm going to anchor one more to the weekly open, and that one is going to be market white, right? So we can see this kind of pinch happening here, right? Where this weekly VWAP, buyers are in control. For the monthly, sellers were in control, right? Prices under the monthly, above the weekly, and we start to see them converge. Anytime you see two different time frame VWAPs converge this way, whenever we do get a break outside of this pinch, it is a pretty violent move. And again, we could take the VWAPs off of here, but you can see it, right? Initially, it looked like that move was going to be to the downside. And, from this weekly VWAP, we did have about 150 point sell, which was a really nice trade. And again, we've talked about, looking for potential 40-point trades in the NASDAQ for the day. But there were some bigger moves available today. And again, back above that monthly VWAP, once we closed above that, again, this is a 30-minute chart. The level was 18,877. We got back above that, and a really nice push. Just want to remind everyone that anything that we talk about in any of these segments is for educational purposes only. Nothing is suggested as an idea to take a trade. We should all be taking trades that fit with our trading strategy, fit our accounts. And if you're following any trades that you hear on Topstep TV or anywhere else on the internet, you're doing yourself a disservice, right? You're asking to lose. And trust me, I've been there before where you're looking for signals. That's not where you want to be, right? The way I learned, and it took me years to learn from a trading mentor. I took his classes and I paid for classes, and invaluable. I would pay more than what he asked for them to learn. My entire purpose while I was taking those was I don't want him to tell me what to do. I want him to tell me how he looks at the market, and then if he shuts down his program today, I should have enough information by the time I'm done with this to be able to trade without him. So shout out to you, Rich, and I've spoke about him before. He's no longer with us, but ran a really great program. I think that should be the key for anyone who is learning from someone to trade. If you say, hey, Jay said this, so I'm going to take the trade. Hey, guys, I lose a lot. And you can't get upset with me if I take a losing trade and you followed it, because you should not be following me. I will tell you that straight up. Don't follow me. Don't follow Dakota. Don't follow Nick. Don't follow anybody. Identify how we all come to trading decisions. And the goal should be, hey, I want to be that detailed in my own trading decisions. So regardless of what happens with the results, I know that those ideas came from me. If it came from somebody else, you're doing yourself a disservice. Sorry to get on the soapbox, but I'm seeing some comments in the chat, and I'm just letting you all know, if you're following somebody else, you're going to be upset. But we'll stop with that for now. Let's pull up the volume. I'm going to frame out let's see if we can get it here. News candle, right? We talked about this a little bit yesterday. We've done this a few times on this segment as well, but framing out this news candle, identifying where the high and the low of it is, and then maybe anchoring a VWAP to there to see how the market is trading. And we chopped around for a while, right? Where we see the anchored VWAP from that CPI print. For a while, that VWAP stayed in the range, which is telling us range-bound activity. You want to fade the extremes. As we push up, volume's not going with it. Maybe a potential short. But a pretty wide range. The high of the candle, 18,872. The low 18,732, and that's in a 3-minute candle, almost 140 points. And that's why we say, try not to trade in that candle because the opportunity is going to come after it. But it wasn't the easiest session. The one thing I want to point out, let's pull up, let's see if I can get that. Okay, there we go. Monthly VWAP, the green line. We looked above it, and the NASDAQ did it the NASDAQ way and ran, almost 80 points above where that level was, where we saw it be a resistance. But then we sold off, right? By the time we got into the New York session, we were already above that monthly VWAP. And I'm looking at this like, hey, is this the time where we're going to see these monthly sellers eventually take their profits and we get that push up? But they tried it one more time, right? They tried to hold the markets below it, right? From the time the New York session opened. That's that purple box that we see here. And let me extend this out a little bit to the right. But that purple box is our New York session opening range. And if take some of this stuff off the chart so you guys can see, but New York session opening range was a sell, right? From the time that the market opened, that New York session, sellers were in control all day for at least an hour and a half. Really nice 300-point move down. If you could capture some part of that, right? We talk about this all the time. Where again, I don't need to know where the market's going to end for the day. If I can catch a piece of this trend, I did my job, right? Or if I can, maybe if I'm looking to buy it and I don't lose a whole lot while the market's dropping 300 points, I did my job. What we want to focus on is what played out over time. And again, we see the anchored VWAP, and this is just the way I look at the markets, anchored VWAP from the session open, leaving the range to the low. We're rejecting acceptance back inside that range, right? Every time we trade back into the range, we're rejecting it. And a really nice short. Maybe you could wait for confirmation where you don't want to take a trade until that anchored VWAP leaves the range. And now you're setting that as your risk, right? Where I want to get in short, close to that VWAP, but maybe not too far away from it, where we see some of these, reversion to the mean moves, right? But at this point, we had confirmation that the market was going lower and volume was following it, right? So we continue to push lower. Give me 1 second. And Hoop, with the questions, I didn't, I'll get to the questions in a minute. I do see them in the chat, but I will get to that question about the crossover. But once we got back above that anchored VWAP, right, from the New York session open, all good, Coach Hoop, thank you. Once we got back above that anchored VWAP from the New York session open, we can see, right, maybe you take this on the breakout, but again, we don't get to see the markets like this, right? So we don't know at this point that we're going to run. And again, I'm looking at a 3-minute chart. We can zoom out and look at higher time frame targets. And I'll tell you guys, if you saw on TopstepTV, I said, I think the market can trade to 19,280. I'll show you how I got that target. It's good to have targets, but we have to assess how good of a job the market is doing at getting to those targets and allowing me to be a part of the trade, right? So on this breakout, I normally don't take this trade because what if this is a failed breakout, right? It might push and then just come right back down. At this point, I'm probably thinking, oh man, the move went without me. I missed it. I just want to buy it now. I'm going to buy it now. You know what? Forget it. The market's going up. I'm going to buy it now. And then what happens? We get a pullback. Right. So when you see this happen, it's okay to be patient. Hopefully, if you watch TopstepTV all day, that's one thing that you did get from the stream, that anybody who was trading on the stream today was extremely patient, and you're going to see that all week. That, hey, if a trade goes without me, that's fine. I will find an opportunity to get into the market, or I won't. But I'd rather not take a trade than to be chasing the market if I think that it left me. The market doesn't leave us. But again, we get a reversion back to that VWAP, really nice bounce from there. And here's why I don't love buying this. Not just because it's pushing up. Think about where we're trading, right? I look at these whole number levels all the time. 18,800, right, is right here. So let me put let's put a line there so we can see it. Horizontal line. Nope, horizontal ray. 18,800, right? Major psych level. The market on a higher time frame so far is in a downtrend. Anytime we get some of these major levels, right, we're going to see a reaction. And we've talked about this before. What is the volume pattern as we're pushing up above this 18,800? It's not it doesn't, to me, it doesn't look convincing, right? It doesn't look like volume is pushing up above here. So I want to be conscious about this, right? If I'm getting in long here, are there any other market participants that agree with the long at this time, or am I trying to push the market higher, right? Ultimately, we are the little fish. We need waves. We're surfers. We need waves to swim. We unfortunately, most of us are probably not trading accounts where we can create those waves on our own, right? So what I like to do is, if I got in here, well, if I'm looking to buy it, I don't want to buy at 18,800. I want someone else to show me that they want to buy 18,800, and then I want to try and get in a better position than them, right? And we can see it. We may have to wait, but if I'm able to wait and get in a better position than this buyer, and we got a couple of things in confluence, right? We're holding this anchored VWAP from the session open. If I could take a trade back up to where their position was, and if they're not ready to make money, cool. I just made 70 points by waiting to get a better position than them, and I traded to their position. If by the time we get back to their position, they want to buy more, and we can see the volume increasing at that point, then great. I'll make money with whoever bought at 18,800. And to me, that's how I frame out my trades, right? I don't want to be buying the highs or selling the lows, because my 1 to 3 to 7 lots are not going to move the market. But if someone else proved to me that they have the ability to move it, then I'm going to trade with them. And let me get to a question from Miko, expecting something to happen when two cross over. So Miko, you're talking about this moving average crossover, and I think we mentioned it yesterday. I don't particularly look for moving average crossovers as a signal to take a trade, but I will use it as an added confluence to take a trade, right? If Coach Paul was on here, he would tell you, I use this 200 moving average because of Coach Paul, that higher time frame moving average, wherever the market is trading in relation to that, is probably the direction that the market's going to go, right? So far this month, we've had the market under the 200 moving average with the shorter term moving averages below it, right? The 20 and the 50 below it. This week, we've seen the 20 and the 50 start to trend and move above it, right? So once we start to move above, this is telling me that the market is crossing. Now let's look at something here, right? If I said I want to take a long when the 20 and the 50 cross above the 200 moving average, I would have been long here at 18,745. Would I would have had a trade that was in the profit, 170 points. Is that a trade signal that some people use? Absolutely. Personally, I don't use it that way because I just don't, right? I'm looking at it on a higher time frame, and this says the market is trying to go higher, but trade location doesn't always have to be this great, right? This is a really nice trade location here. It's not always that good, right? Let's say I did this one, right? This is a 20 moving average cross above the 200. The market was trading at 18,839. The high of that move, I could have gotten 20 points out of that before the market pulled back. So am I going to use it as information to strengthen a trade idea? Yes, but not as a signal. But great question. And if you were talking about VWAP crossing the moving averages, then yes, that's again another. It's a strengthening argument for a trade, right? It's like, hey, I want to take this long. Now, how many? The way I was taught how to do this was, let's say you have a trade idea. It's going to start off as a 50-50 probability. How many things can you add based on how you look at the market that add a percentage? If I'm looking to take a long and the 20 and the 50 moving averages are above the 200, that might add a 10% probability to my trade. So now I have a 60% probability trade. If I now have volume building in that direction, that might add another 10%. I have a 70% probability trade. If we're pulling back and using VWAP as a support, and this is all for a long, we use VWAP as a support, that might add another 10%. I have an 80% probability. Of course, the outcome is going to be 50-50, right? It could be a win or a loss, but I'm taking a higher probable trade with all of the confluence that I have. Big Sexy, thank you. Thank you. Glad that everyone enjoyed the segment today. That was a lot of fun trading with Dakota on Topstep TV. All right. Let's see. That was the NASDAQ. I do want to move over to the ES. Let me see if I got any other questions that are relevant to here. Give me 1 second. With the PPI release coming tomorrow, is there any realistic way to forecast how the release will affect the market? If it comes in in line with expectations, kind of like what CPI did today, right? CPI was in line with expectations. We saw the market sell initially, but then bounce back up. And I'm still seeing this move as a reaction to that news, right? So if it comes in line, maybe we just continue to rally up. If it comes in hotter than cooler than expected, maybe we rally. If it comes in hotter than expected, maybe we sell off. The one thing I know is it's going to add volatility into the markets. And I will trade it the same way. And that was great filibuster that asked that question. However, I don't know that I want to predict how the market's going to respond, because then that is building an opinion about something I can't control. Right. The one thing I control is when the market shows me where it's going, how I manage my risk in it. Tell me where you want to go. I will be a great follower, or I will try to be a great follower. Right. That's when I make my most money. When I'm not thinking about what Jay wants, I'm thinking about what the market says it wants, and can I get in the flow with that. So I try to keep my own opinions out of it because the market truly does not give a shit what I want. But this looks bullish. This looks bullish for now, back above that monthly VWAP. Dakota was talking about 20K to end the session. We know he's a perma bull, but that could very easily happen tomorrow, right? We saw a 4.4% swing in the Nasdaq today. 4% up puts us at 20K. Now, is that a huge day? It is, but anything can and will happen in these markets. So I'm looking to the upside. And again, we'll go back to the daily chart. Shout out to Coach Paul again for these moving averages. But that 200 moving average, this is now on a daily chart. We've talked about this, right? We bounced off of it, used it as a support. We can go back years and see how many times we actually trade that 200 moving average. This is back in 2023. We have 1 test, 2 tests, 3 tests. The 20 and the 50 are above the 200. This is still a strong uptrend if you zoom out. Now, where do our day trades fit in this? That's what we need to focus on at Topstep. But this looks pretty bullish, right? Above us, I'm going to look at this daily 20 moving average at 19,370. That's going to be a key. If we get back above that, and I can also see that this huge down candle that we had, yeah, we need to get above, I think bulls need to get back above 19,300, then 370, then it's 500 from there. But yeah, air horns on the way potentially. Couple big news catalysts. We got jobless claims, PPI tomorrow, FOMC next week. If the market likes it, we will see some more upside. Let me go to the ES real quick. We spent enough time on the NASDAQ, and why we want to go to the ES, because if we're going to get air horns, it looks like it's going to happen in the ES first, right? The NASDAQ highs are at 2983. The ES high is right around 5724. So we're only 3% off all-time highs in the ES. That move could happen quicker. And similar to what we were talking about, right? This is a daily chart. We're above the 200 moving average. The 20 just crossed above the 50. So ES looks a little bit stronger in that sense. And just a really nice trend up on a higher time frame. Got the same thing on the 30-minute chart. Again, that 20 and the 50 crossed above the 200. We did see the sell-off early in the morning, but we came back down to some of these demand levels. I was looking for a downside target. We saw that like extended sell-off after the session on Friday last week, right? We were doing at the buzzer and the market kept selling off. I was looking for that as a potential target to the downside. We ultimately didn't get there, but again, a really nice bounce. The ES looks very similar to the NASDAQ. I will do the anchored VWAP on the month here as well. Again, I'm telling you guys, this has been one of my, I'm always looking to add things to my trading. And when I say add things, it's just different ways to look at the same information. All this is another read of volume. Look at this red line here. Again, anchored VWAP from the monthly open. Resistance, 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 becomes support. Right? How many times can you hit a brick wall with a hammer before it breaks with a sledgehammer, right? And we hit it 5 times. Eventually it's going to break. And way better example here in the ES, where I think, and we've said it all the time, but the ES respects levels a lot better than the NASDAQ does. But quick check up towards it. Uh, we'll zoom out, use a higher time frame, and we had the CPI print. CPI print pretty much checked that weekly VWAP. We looked above it, less than 10 points, and really nice sell-off. So I was leaning towards the sell side today. The first trades, that being said, the first trade I took were longs because I was late on the short and thought, okay, maybe we'll reverse. I got stopped out on some funded accounts and then switched over to combines and eventually caught the long. But I really do love that monthly VWAP. And now that we're claiming above it, this is telling me buyers are in control until they're not, right? So I'm going to read it that way. But let's see if I got any more questions, probably on the equities before we move on to crude oil and gold. Tessie says, love your explanations. You are a natural teacher. So I think at one point, that was going to be a career choice for me, to be a teacher. I don't know what it is. I think that's why I'm a coach. It's why I coached basketball for 12 years. I kind of love explaining things to people. Maybe I just like to hear my own voice, but I like to take a concept and break it down to where we can all understand it, hopefully, and that's exactly what I'm doing here. But thank you for the comment, Tessie. And then we got a question from Storm Dragon. What do you think is the best way to set up a trade? So that question is going to vary for any trader. My highest probability trade is going to be volume based. It's seeing volume fail. It is a little bit of a loaded question, but that's all right. I'm going to give it from my perspective. I want to see volume fail. Once that volume fails, I want to take a trade, right? Now, that volume can fail in either direction. So if you ever watch me trade, I might be talking about a long and then taking a short, or talking about a short and then taking a long. The best example that I can give you right now of volume failing is something like this, right? We talked about this in the NASDAQ where we had a push up. Sellers tried to push the market lower. They failed here on an increase in volume. They failed, right? So what I think about is not the price action. Somebody is taking this trade, whether they're sitting in their house, they're running a fund. Somebody is in this trade. I want to think about what their thoughts are when their volume fails. Because to get this price action, somebody had to sell. When they sold at 18,740 and the market is now trading at 18,790, if you were short 18,740 and by the time we're trading 790, what are you probably doing? Buying the market, right? Because you have to buy to close. That's my favorite trade setup because these failed sellers are going to expedite this move to the upside and I want to get in their trend. Sometimes I can get in near the lows of their candle and, improve my risk to reward. Where if I can get in somewhere low here, I can just risk these lows where if they are able to get traction and get follow through, great, then I didn't lose a whole lot. But once we get a candle close above where those sellers came in, they are kind of screwed, right? They didn't show us the momentum to keep going. And failed sellers become buyers. Buyers push the market up. That's my best trade setup. That is going to be different for every person, but that is how it works for me. But good question. I would say find whatever helps you make sense of the market and identify what those best trade setups are, right? For me, when I'm looking at this, I'm trying to still figure out, okay, this is a trade setup initially. I want this whole move. And I'm saying the whole move. I'm not expecting to capture 100% of it because I don't know where it's going to go. But I want the market to tell me to get out. We talked about this a little bit before, but anchoring a VWAP to where you got in, close below VWAP. Where did this market close below VWAP? It never did. So when I review these charts all the time, because if something happens, there's a way to trade it, and that's the way I look at it. But it's how do you trade it? Now I got to ask myself, this looks great. I do the trader math. If I just get long here and then I hold 15 contracts for 500 points, I made $100,000 on the day. Great. That math sounds great, but what you're neglecting is that was a 4-hour trade. How many of us feel comfortable holding a trade in the NASDAQ for 4 hours, right? We do the trader math and we measure it out, and it's real quick to just pull out a ruler and say, yep, 500 points. All I got to do is hold 15 contracts and we're moving on up. Play the theme song to the Jeffersons, right? But we don't think about the 4 hours it takes to actually hold that, or the 3 hours it takes to get 50% of that. So that's where I'm trying to adjust in my own trading, holding trades longer, and I'm trading things like the bonds and 10-year notes in order to improve that. So you're using EMA, or is it the candle after? Again, in my own trading, I use VWAP. I will secondarily use the EMAs, but that is not something that I personally teach. That's something I learned from Coach Paul. But I see how often it works. And again, I'm not old enough to know the Jeffersons. Yeah, I knew. I wasn't alive when they were on, but reruns. I think I've seen every episode. But I use these EMAs as I've been working with Coach Paul for a year, right? So I'm a trader. If I see something work for somebody else and I find a place that it can fit in my own trading, I'll absolutely use it, right? If you saw me on Power Hour just now, we had a pullback to this 220 moving average on the 3-minute chart. It's been holding it as a trend the entire time. I took that trade. Do I keep these moving averages on my charts all the time? I don't, right? The only reason I truly have these on here is because I work with Coach Paul and we do this segment and we're sharing my charts and it goes from there. But I've seen it work. So if I identify that as a pattern, I'm going to take that trade every time. Big Sexy, you got the song in your head now. How do you set up the anchored VWAP to the news or any specific event in Topstep X? All right. Show this. So on the left on Topstep X, you have these drawing tools. You have one called forecasting and measurement tools. You want to click that right arrow. And about halfway down that menu, you have an anchored VWAP. I put a star next to mine because I use it all the time. When I add it to my favorites, I got this little cool trading drawing toolbar up here. The one all the way on the right is anchored VWAP. And then what I'm going to do is find the news, right? So the news happened at 7:30 Central. All I'm going to do is hover over that candle and click it. Now this is VWAP from that news, and that's it. The other thing I do is, again, because I like visual cues, I frame out that candle for the whole day, right? That's telling me the market's reaction, the volume's reaction to this range. Price went above it, but we noticed volume didn't really leave this range until the end of the day. You might have heard me on TopstepTV talking about a retracement, and this is why. And it didn't happen, but that doesn't mean it can't happen tomorrow, right? And that doesn't mean it can't happen the rest of the week. So I am looking at that as, again, if price keeps going up, I can't just say, well, the volume's all down here, I need to short it. If it's going to keep going up, it's going to keep going up. But this is a pattern that I've seen that's a big gap between where price is and where the volume average is. So looking both ways before I cross the street, I would not be surprised at a downside move. And if we do start moving to the downside, that's when I start saying, hey, where are potential targets for this downside move? Of course, the first one is going to be 19K. And then after that is going to be that anchored VWAP from the most important news this week. All right, what do you use to frame out the volume? It's just a rectangle. You can use a rectangle tool, a fid tool, whatever it is, just a drawing tool. You could use 2 lines, right? I could use a horizontal line, put one at the top, one at the bottom. Really simple stuff. Really simple. I don't care how you do it. That's how I would do it. Will I anchor a VWAP from PPI tomorrow? 100%. 100%. We saw those last month be some pivotal levels going into this month. So 100% I will be leaving on those on my charts for the full month. Last thing I want to talk about, I had a target in the NASDAQ of 19,280. And I wanted to tell you where that came from. Target of 19,280. I think I called it out when we were about 100 points lower than it. I said, this sounds like a stretch, but I think we could get there. Where did that target come from? We framed these out yesterday, right? This is last month's PPI print. The high of the candle is 19,372. The low is 19,175. You guys know how much I like 50% retracements. 50% of that was 19,270. If we fast forward to today, we can see we traded right to 50% of that. I don't know why these 50% retracements work all the time, but they seem to. And then if I go out to a daily chart, we had this big daily down candle. And a lot of this stuff, guys, I'm gonna be honest with you, is just looking at charts and just seeing how often patterns play out. And hope you saw it. So this is why I really love these, right? So two different levels, right? I had this huge daily down candle, which was September 3rd, right? We had a big down move. 50% of that down move was 19,293. We can see where we actually wicked to today. And then we had the 50% of last month's PPI. That is just, again, how did I, some of this is volume based and then some of it is just hours staring at the charts and just drawing shit until a pattern presents itself, right? And that's where that target was, right? We can see the high of the day was pretty much 50% of that huge down day. That's why I had that target. And to me, it's cool to have targets, but we still got to assess how good of a job the market is doing at getting there. Now, if we put everything that we just talked about into Confluence, right, these moving averages, and I think I even said it when I took, because I did take a long on this account off of this. I think I just removed the moving averages. I took a long off of that moving average and look at the patterns. We're getting kind of technical here, but that's okay. Hopefully I'm not losing anybody. And if you have any questions, do let me know. I can talk about this stuff all day, but let me just fix these real quick. 50, 200. So these bounces, right? And again, I believe markets are all pattern recognition. You can have opinions about where you think the market's going to go, but the market is going to show us a pattern and we can follow that pattern. These bounces from this 220 moving average, bounce, we got about 90 points. Bounce, we got about 100 points. Another bounce, 120 points to the close. So I took that trade and I think I took it for 10 points. As soon as I got out, I said, you didn't pay attention to what the market was telling you. The market told us for 4 hours that every time we bounce off this 20 moving average, there's at least 100 points in a move present to you, right? So I took the trade off because I was probably trading my P&L, trading my account. But what did the market really tell me? Higher time frame, if I zoom out, that is a reasonable target to have. Does it sound crazy? I said it when I said it, right? That might be a crazy target, but I think it's possible. To me, this is where you find a place to trail the market to get back up to. And again, that's in my own trading as well, but it is not an unreasonable target to have. Yeah, it's really cool to see these things play out. Any other questions on the equities before we move on? Control Z to undo removing an indicator. Thank you, TradeX. I tried that. It didn't work, but I probably hit the keys wrong, but thank you. Can you show us your settings for VWAP? They are open, high, low, close. Actually, they're not. They should be open, high, low, close divided by 4. And the settings for these moving averages, simple moving averages, I'm using the moving average triple indicator because Coach Paul uses those 3 moving averages. The 20, 50, 200, and keep it as simple. His Royal says, that's the emotional side, trusting those thousands of hours of screen time. Yeah, so that's a great point. And I think there's a couple of sides of emotions that go with that, right? Where I don't ever want to say that I know something is going to happen in the market, but when you put in so much time, you can say to a high probability, I expect something to happen. But if you over leverage due to ego because you know something is going to happen, you'll be out of the trade before the market actually does what you expect it to do, right? So it's all of that. It's balancing the emotions of, hey, I think that I'm right on this idea, but this could be one of the, if this is an 80% probability, this could be one of the 20% that it doesn't work, right? I still have to be okay with those percentages. Steph Curry could shoot from 40 feet and make them to a high clip. He accepts that 60% of the time he's going to miss. And that doesn't affect the next one because I just play the game of percentages. And if you put so much weight on one trade, that's when we get messed up, right? Where it's just like traders get, I know this is going to happen. This has to happen. Great. I said that I felt that the Nasdaq was going to trade to 19,280. If I traded 15 contracts and we got any kind of pullback, I would have been stopped out before the move. And now I'm thinking that I have, some type of mental barrier to my trading, and that could be the case. But maybe you're just not trading the account size that you're not trading in the game that you're in, right? You are, and I'm not trying to throw shade at anybody because everybody has been at this point. You're a YMCA basketball player, but you want an NBA contract. Be honest about where we all are. And I remind myself of that all the time. Trade the contract size that fits you, and then you can build over time to get to trading an account where you can put on that size. And the only thing that changes, your trade setups are the same. The only thing that changes is adding contracts to pay yourself more. Tessa, your first time here. Thank you for joining us. Thank you for sticking around. To anyone that is here, we spent enough time on the equities. Let's go over to crude oil. Can I do a whole video on volume and how I use it? Blue Chrome. Let me see if I can get a link to the coaches library in Topstep Discord. Give me 1 second. There are some volume videos in there. Again, some of these are kind of months old, and I think I've gotten better at explaining some of this stuff. But there's a link to the coaches library. You can find the Coach J tab in there, and there's some volume videos, some live trade examples about how I'm looking at volume. You can take a look at those. All right. What else we got? Let's go to crude. Crude oil. We've been talking about this market being beat up, right? Very heavy. In this downtrend, we are below the colors got all messed up. So let me change these real quick. Below that 200 moving average on, let's make these lines a little bigger. Below that 200 moving average on the daily, the 20 crossing below, the 50 crossing below, and in a downtrend. Since we pretty much checked 80, we've been in this downtrend. I will take these things off. But yeah, in this really nice downtrend, again, this is a daily chart, and we can zoom out. We've zoomed out before, and we talked about these 2023 lows. We talked about this yesterday. We've been talking about this all week. Under that $70 level, crude has been very heavy. The low of 2023 is right around 63.63. The 50% of that candle that made the low is 66.75. And if we fast forward to today, look where we traded around, right? We traded to it yesterday, kind of chopped around it today. We did have inventories out today. I don't know what came out. But as far as a day trade, we can see that inventory print right now. Crude somewhat imbalanced over the last couple of days. That does not mean that it was not presenting opportunity. And I want to talk about how we could have day traded this. Again, we know we are at this higher time frame demand level, but from a volume perspective, right? Again, I told you guys I look at volume all the time. And some of my best trades come from framing out a news candle and seeing how the market responds to it. So we had crude inventories come out at 9:30 Central Time. I'm going to frame out the high and the low of that candle. High is 66.74. The low is 65.86. Let's anchor a VWAP to there. After the print, the market price action tried to push a little bit lower. Volume did not go with that move. We started to reclaim back above that volume. And again, maybe you take a long here, or maybe you're short, right? Maybe you see the inventory report come out. You were short from, the London session. You see this happen and we get no continuation on this. Or maybe I shorted after the inventory print and I got 50 ticks out of a move. I got 40 ticks out of the move. I made $400. Could I be holding this position and saying we should trade down to 65? I could, but what is the market telling me, right? At this point, the market is hitting a support, demand, whatever you want to call it, and it's showing us that there's no more selling volume to push us lower. Now, could I hold on to that position and say, no, this needs to go lower? I could, but if the market doesn't agree, then we get a pop back up. So where can you exit this? Maybe you set a stop loss, 2 ATRs like Coach Paul talked about, 50 ticks, and I'm out. Maybe you get out above that VWAP because now sellers have lost control. Buyers are in control now. A couple different ways to manage that. But we talked about, for me, what is a great trade setup? A close above failed volume. So, and I know Coach Paul loves this one as well. 3-minute chart, we have this failed, not even really failed volume. We have selling. Selling came in. They stopped at 65.86. A little bit of continuation after it. Once price closes back above this, any seller who's in this candle either is an investor now, or they're going to take their profits. We close at the high, or they're going to close they're covering their shorts, right? When they cover their shorts, they become buyers. That pushes the market higher. To me, that is a great trade signal. And there is a 60 tick move in a couple minutes off of that signal alone, right? That's a trade signal. I don't care where the market's going. That's a trade signal. We continue to move higher, and could you have held for a little bit longer? You could have, but you don't have to, right? You don't have to hold for this entire move here, where there's a, on a one lot, there's from anywhere from 100 to $400 on a trade there. Have I used footprint charts, Oscar? I've used them. To me, they just kind of get a little noisy. Quantower, I trade on Quantower. I get a lot of my levels from indicators on Quantower. Quantower has a version of footprint charts. What I use it for is to identify imbalances in volume. They're useful. They are useful if you're a volume analyst. To me, they're just, a little too noisy. I feel like I would need like a jumbotron to actually see the levels on footprint charts, right? They get kind of really consolidated. So I think they're very valuable, but they're just kind of noisy. But good question, Oscar. But yeah, that's crude. That is crude oil. Have you used Tradeovate with TradingView? I have in the past. So going, looking at crude, if I'm just, you guys are kind of getting some of my live reads of this. I like this candle here. We kind of rejected at it. 67.75 is the low of that candle. If we start to accept back inside of this, and we see buyers accept back in this, 68.80 target from there. Let's see if there's anything else. Let's look at this one. Yeah. Yep. So back above 67.75 and a confirmation, right? Candle closes inside of this area, then I think we see some upside. All right, and gold, and then we'll get into some questions. We got about 12 minutes left. Gold, I said this yesterday, guys. I don't really like looking at gold right now. It is a range-bound market, so if you're a range-bound trader and you're looking for a place that's ranging, gold is your spot right now. If we zoom out on a 30-minute chart, we've been in this range for 26 days. To me, it's too tight of a range to take a trade, so I have not been trading it much. But on a shorter time frame, we can do the same thing, right? Frame out the news candle, see if it presents opportunities to us. But this is a tough one. I haven't really been looking at gold too much for that reason. What's interesting, and I see a couple of these. This is at 1:39 a.m. Central Time. I don't know the significance of 1:39 Central Time, but I'm going to frame out that candle because that's a lot of volume for this overnight session before, not really during the Asian session open and before London session. That's a ton of volume to be trading at that time. Framing that candle out sometimes can give us an opportunity. We can see we didn't recheck it, but that was a little weird volume anomaly. Sometimes you pick those out and you'll see the market trade right to it. Other times you don't. But we can see whatever that volume was, that was a lot of selling for that time frame. If you were trading with D, that 50% retracement of that was a nice short. But outside of that, I'm not seeing too much in gold. And then for my scouting report, I had the 10-year notes. I told you guys I've been looking at 10-year to try to identify some trading opportunities. Didn't look at the notes today because I saw such a strong reaction on the news. In hindsight, I think I probably should have looked at it because you know, really strong news candle, no follow through afterwards. Excuse me, no follow through afterwards. And sometimes I told you guys I would buy the lows of this. I like doing, if I'm going to do that, I would like to do that on the notes and not the NASDAQ, right? Because the notes are going to respect levels a little bit more. I like that as a potential trade. If I was looking at this market, of course I wasn't. Risk would probably be, if I was able to buy these lows, risk would probably be somewhere down here. But I really like this as a trade, right? Trade setup. I told you guys the one I was looking at yesterday was basically the opening range breakout with an attached VWAP. We didn't get that today because we had this reaction to the news. But this is such a large range that not surprised that the market traded in that range, right? You can kind of see how the market respects the highs and the lows of it. Trading something like this, if you're looking for a market that respects levels, doesn't move very quick, this is where you want to be. Let me get a drink real quick. We got about 10 minutes left. If there's any other questions that you guys have, want to ask, let me know, and I can answer them from there. I think I got to I think I got to a lot of the questions that we had. I am going to be on Slow Markets tonight with Dakota. Of course, Dakota is doing a TopstepTV takeover the rest of the week. Tomorrow, he has Nick Fortick on with him during Fast Markets and Deanna on to close out the session. And then on Friday, I will be on for Fast Markets time, and Nick is closing out the session. So a lot of great trading content. I might be biased, but I think some of the best trading content on YouTube right now. I might be biased, and it's not all winning trades either, right? It is all sides, all emotions. It's missed trades. It's calling out a trade and not taking it. All of the things that we all kind of deal with as traders, but you're seeing people who have years of experience and how they deal with it, right? Dakota had a long today in the Nasdaq that if he was not running a stream, he probably could have made 50 grand today, or he probably could have lost as well. But that is what we want to do. This is all real trading. Regardless of the accounts that we're in, again, I was trading combines on there because I was done with my funded accounts at the time. Kuro says, why would you buy those lows in real time? Good question, right? That is a trade setup that I like to take, and it looks like a scary one. But the reason I would take it is because a few things, right? Failed volume. This looks very heavy, right? And again, we get to see the charts like this. We get to see the charts that way. Anybody know how to take these? I'm gonna take all these things off of here for now. These price labels. There we go. Now we can see the charts. That looks very heavy, right? I would not take the trade on this candle here. Wouldn't even take it here. This would have to show me with volume. So I'm gonna wait a little bit, right? I'm gonna wait, but volume has to show me that it's not moving lower and give me a place to limit my risk, right? If the next 3-minute candle just sold completely through it and we just kept getting follow through, absolutely. I would probably have to wait a good half hour to an hour before I would even get into this, right? But I know that this was news. I know that this is a big reaction to news. So it's not just the level, it's where the selling stopped on the reaction to that news, right? So I'm taking that into account. Volume didn't follow lower. And we've seen the angle of VWAP when it's flat usually mean range bound markets. So potential pop back up. And if you guys have joined at the buzzer before, when we were in Discord, you know where the target would be on this conservatively. Conservative target would be 50. Higher target would be the high of the range. And then if it continues to go from there and I'm still in on a trail, then I'll take whatever the market gives me. But I have to go with conservative price targets, right? That would be a long entry to me because we had a news candle. The market could have just continued to sell off if they wanted to, but they didn't, right? So this is a really cheap risk. 2 ticks, four ticks on a one lot in the 10-year is $60. $60. We also have this major 115 level right here, psych number. So I could have set my stop somewhere below that, right? A couple of things. And I'm saying all of this in hindsight because this is a trade setup that I would like to take. But I still got to be there to take it, right? Let's see if there's a case to go short here. I think there is, right? Same idea. We have selling. The market's pushing lower. Could I go short and risk 50% of that? I could, right? The one reason I don't like this short is if this VWAP is leaving the range as quickly as price was, then that tells me that other sellers agree. The reason I wouldn't take this short and I would rather take it long is because VWAP stayed in the range. So hopefully that makes sense. Let me try to find an example of where, let's look, I think it happened in the NASDAQ today, honestly. NASDAQ opening range, and I'll show you the volume coming in, not failing, getting follow through. Let's see, NASDAQ opening range, this one. Attach a VWAP to that. Let's see how quickly VWAP leaves this range. See the difference? Where maybe I'm not even taking it right away, because even here, price left the range, volume didn't. To me, if I'm reading this with the market trading right now, this is probably a 55% trade, right? If this is all I had, right? I could be reading order flow as well. I could be reading time and sales. I'm reading the DOM to see whether or not there are buyers stepping in. But on just this alone, with 50% of this news candle, this is a 55% probability trade. I don't want to put my money behind 55%. I want to put it behind 65% and up. Did the probabilities increase at all? Maybe a little bit. VWAP is starting to slope lower. But now we're 15 minutes into the trade, and if I'm trading my best, I haven't seen a check mark yet. There's one. Okay, so now what do I say? Volume left the range to the low. So did price. But now at this point, we're trading at 18,800. Can I take a short here? I personally, if I'm trading at my best, I can't, because we're so far away from volume. We're 50 points away from that VWAP. Do we get any retracements to it? Now, maybe I'm taking a trade somewhere around here, right? But this is a whole hour, half an hour into the session. I actually don't see, based on that setup, this is probably an A setup here, and anything else after that is a B, because an A plus to me, and anyone who's joined At the Buzzer before has seen it, an A plus to me is volume leaves the range. We get price to come back, check the low of the range, reject, add it. And now I'm in a better short than the sellers who are pushing this price lower, because my average price is better than theirs. So hopefully that makes sense. What's a good trailing stop amount on a NASDAQ? It depends on how the market's moving. I don't know if I use a specific point or tick amount for a trailing stop. I want to trail behind market structure, right? So if I'm in this short, I want to find some market structure, something like this, right, where the market traded up to these levels, keeps rejecting, and give it a few ticks, right? I don't want to set it exactly at it, because we know how much the market likes to revisit levels, but trailing behind some type of market structure, right? Whether I'm here and then maybe we get this candle, so then I trail there and I would have gotten stopped out. But I think it's going to be, if the market's really moving, it's somewhere around 10 to 15 points. But that's kind of a hard one, because I don't really look at it that way, but I'm sure you can. And I like to think about trailing stops once the market goes in my favor. 15-point trailing stop. Nice for Zizov. We are at the hour. I've been on for almost 3 hours straight. I can't complain, because Dakota did a all-day stream pretty much. But I am going to be on Slow Markets with Dakota later tonight. So I will catch you all then. Thank you for hanging out. Thank you for all your questions. Hopefully anything we said today is helping you in your trading journey. Go ahead and hit that like button if you haven't already. Let me think. We have Coach Ray and Coach Vince in Discord doing sessions every day. Coach Ray is at 6 p.m. Central. Coach Vince is at 7 p.m. Central. And then, of course, Dakota at 7:30 Central Time. All content to hopefully improve you as a trader, improve your journey as a trader. different viewpoints of the market. The one thing you're going to hear from all of our coaches is risk management being the most important. So if you continue to trade today, if you trade tomorrow, trade the rest of the week, make sure you manage your risk. Thank you to our mods for sending questions. Coach Hoop, thank you for joining as well. Thank you, everyone. I will talk to you all tomorrow, or actually tonight. Have a great rest of your day, and we'll speak to you soon. Bye.